Hello. If you're a Nigerian business owner, you know the hustle is real. But, beyond just making sales, really understanding your money is what takes you from just surviving to actually thriving. Today, we're going to break down 5 key financial terms that'll give you a super clear picture of how your business is really doing. Let's get right into it. So, here's the big question. The one that probably keeps you up at night, right? Money's coming in, customers are buying, things feel busy, but then at the end of the month, you look at your account and you're thinking, wait a minute, where did all the money go? See, making sales isn't the same as making a profit, and that's the puzzle we're going to solve today. I want you to think of this like a journey. We're going to follow the money, starting from the moment a customer pays you. We'll track it all the way down, subtracting every little cost until we find out what's actually left. The money that's truly yours. It's the real story of your business's finances. And this is our roadmap. These 5 terms, they build on each other, telling that financial story step by step. We start big with revenue. Then we'll take away the cost of sales to find our gross profit. After that, we subtract all the other expenses to get to profit before tax. And finally, we hit the big one, the famous bottom line, net profit. Ready? Let's go. Okay, first up, revenue. This is the top line number. It's the grand total of every single sale you made. Think of it as the full pot of money you've generated before you've paid for anything at all. It's our starting point. Let's use a real example. Imagine you run a small shop. You sell 200 items in a month, and each one costs 2,500 naira. You just multiply those two numbers, and boom, your total revenue for the month is 500,000 naira. Simple enough, right? But trust me, this is just where the story begins. Okay, next, we have to figure out our cost of sales. You might also hear this called cost of goods sold, or COGS. Now, this is really important. This is not every cost in your business. It is only the direct costs of the things you actually sold. So what's a direct cost? Well, it depends on your business. If you're a retailer, it's pretty straightforward. It's what you paid your supplier for those 200 items. But what if you're a baker? It's a bit more involved. It's the cost of your flour, your sugar, even the wages of the person who baked the bread. It's not the rent for your bakery or your marketing budget. See the difference? So, back to our little shop. Let's say it cost you 300,000 naira to buy all those items you ended up selling. That 300,000 naira is your cost of sales. So now we've got our first 2 big pieces of the puzzle. And that brings us to our next stop, gross profit. This is like our first major profitability check. You just take your total revenue and subtract the cost of sales. It's the money you have left before paying for all the other stuff like rents and salaries. Now, why is this number so important? Because it tells you right away if your pricing is right and if you're buying your goods at a good price. If your gross profit seems low, that's a big red flag. It means either your products cost too much to buy or you're not selling them for enough. For our shop, we take that $500,000 in revenue. We subtract the $300,000 in cost of sales, and we're left with a gross profit of $200,000. That feels pretty good, but hold on, we're not at the finish line yet. The business has way more bills to pay. And here they are, your operating expenses, or what people often call overheads. This is all the money you spend just to keep the lights on, things that aren't tied to one specific product. We're talking about rent, salaries for your staff, your NEPA bill, data for internet, that ad you ran on Instagram, and even the interest on any loans. So once you subtract all of those operating expenses from your gross profit, you land on your profit before tax, or PBT. We are getting so much closer to the real number now. This is basically what your business earned before the government comes for its share. Okay, let's keep going with our shop. Let's say all those overheads, rent, salaries, the whole lot added up to 150,000 naira for the month. We take that away from our 200,000 naira gross profit, and that leaves us with a profit before tax of 50,000 naira. And finally, we've arrived. This is our destination, net profit. This is it. The bottom line, the actual final true amount of money your business made after every single expense from buying the product to paying your taxes is gone. And hey, don't just take it from me. As the experts at Sage say, this is the number that shows if your business truly made money. If this number is positive, congratulations, you're profitable. If it's negative, you're making a loss, no matter how much revenue you brought in. So, to finish the story for our shop, let's say the business owes
15,000 naira in taxes. We subtract that from the 50,000 naira PBT, and our final take-home net profit is 35,000 naira. That is the real earning.
And here you have it, the entire journey in one simple table. It's kind of powerful, right? We started with 500,000 naira coming in, and after we peeled back all the layers of costs, we discovered the real profit was 35,000 naira. Seeing it all laid out like this just makes it click. But wait, I've got a little bonus for you, a really useful metric called the net profit margin. This isn't just a number, it's a percentage, and it tells you how good your business is at turning sales into actual profit. Honestly, it's the ultimate health check. And the formula is super simple. You just take your net profit, divide it by your revenue, and then multiply by 100. So for our shop, that's 35,000 naira divided by 500,000 naira, which gives us a net profit margin of 7%. So what does that actually mean? This chart just says it all. For every naira that came into the business, a whopping 93% of it went right back out to pay for everything. Only that tiny little slice, just 7%, was left as pure profit. Let me put it to you this way, because this makes it so clear. A 7% margin means for every 100 naira note a customer hands you, after everything is paid for, you only get to keep 7 naira. Wow. Knowing this percentage is a powerful way to track how you're doing over time. So let's just recap real quick. We followed the money from revenue, subtracted the cost of sales to get gross profit, took out operating expenses to find our profit before tax, and finally landed on net profit. These aren't just boring accounting terms. They're the vital signs of your business. It's like a doctor reading a chart. It tells you exactly how healthy your company is. And that brings us to the most important part. The whole point of this was to give you the tools to read the story of your own business. So I'll leave you with this question. Now that you know how to follow the money, what story are your numbers telling you? Thanks for tuning in.